Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures. I noted on Twitter last night, for the first time since down in the 1890s, I am net short. And it's a combination of things. I'm not calling a top. The point I made to my members is twofold. Number one, if you've been long a lot of our calls all the way up here for the last 100 plus points, you really need to take some serious profits. Not just a little bit off, you need to take some serious profits. You need to take some serious profits, leave some on, and roll up your stops. Okay? Additionally, if you are just naked long and complacently holding, you need to be more vigilant and you need to hedge it off a little bit, which is what we did last night. So effectively right now, I am trading around a long position, and I've got a short position that I intend to hold. The size is very small, but it's a change in outlook for me that I'm going to give the week to kind of bear itself out. We've got employment coming up on Friday. The most important number on the board continues to be the 97-98 area, which is also the area of the weekly pivot, and that for me is going to be a dividing line between bullish versus bearish control going into next week. So we've got some big announcements coming up with jobs, but I just wanted to give everybody a heads up that the potential, especially in the way we traded yesterday, we made that high yesterday at 2011. We saw nothing but lower highs after that. It stayed under some very important proprietary stuff that we look at in the room all day long. And my compatriot that I trade with all day, Jack from channelsandpatterns.com, is seeing some things on his charts that that's telling us that it may be time for a little bit of a retracement. And that would violate the 93% stat that I've been looking at with respect to touching the upper band before the middle band, but no stat is 100%. So, like I said, not calling a top, but if you're up big and been long, you need to take some serious profits and roll up your stops. If you're complacently long up here, I would suggest that you start to hedge a little bit, and you should always be hedged slightly. But I really, want people to start to vigilantly hedge things because, it's been a good run. We've been basing for the last 6 days, but I'm not seeing the follow through on the pushes that I would like to see, that I have normally seen during the course of this uptrend. So I'm a little cautious today. If you're a bull, you need to see 2011 get taken out today, and it should be, because we have jobs report tomorrow morning at 8:30 in the morning, and typically we walk up into those. So from the long side, if we do walk up, I plan to take full advantage of that. If 2011 survives today as the high, then that will get my antenna up about a further negative reaction going into tomorrow. But we don't game jobs. We don't make trades 2 minutes before jobs, assuming what the reaction is going to be. We get our range and we trade the day. But this is a little slight change in character for me, simply because I've just been long and not worried about it, since the lows in one form or another. But now I think it's time to, be a little more vigilant, to get some hedges on and take a look at things. So, and for updates on that and everything else, follow us on Twitter at Princeton Trader. Come check out the website, PrincetonTrader.com, or even better, come check out the chat room. And you can maneuver the next couple days with us in the room. We had, dozens of traders last night talking all this out, between 7 and 9 o'clock at night. So, we love what we do. We love to trade, and it's a fun place to be. All right, have a good one. I'll be back tomorrow morning with another webcast. Trade 'em well.